Hello, good evening, everyone, traders and investors. Good to see every one of you here. My name is Alex from MarketWise Asia. Today it is the 2nd of December 2022. Time passes very fast. We are into December and it's going to be Christmas soon. And of course, today, as I'm talking now, we are in the midst of two World Cup matches, Uruguay and Ghana, and also South Korea and also Portugal. So I expect today, Facebook Live to have lesser people. Just now I was watching the matches also until I have to come and do this Facebook Live, okay? So how many of you here are watching the Facebook Live? Just type me in the comments. All right, anyway, if you can hear me loud and clear, just say a hi to me in the comments in the chat. And this streaming is broadcasted to both Facebook and also on YouTube as well, wherever you are watching. So I welcome you. Thank you so much for staying with me, okay? And foregoing the World Cup matches, So, okay, just stay with me, okay, for about 1 hour. Then you can go back to watch your matches again later, okay? All right. So let me take a look at the comments right now. Hello, Wei Lun. Hello, Dave, Christopher, Wang B. Hey, Dave, right? Congrats on winning the 3 days, 2 night Batam getaway just by supporting our Market Insights Virtual Summit. Okay, all right. And Mary, Adeline, Pei Wen, Manfred, Mark, Tim, Ong Chingong, okay, Pauline, Stephen, Christopher, Pauline, okay, Sing Chong, Cheryl, Manfred, okay, Quack, SP, Philo, Tiger Beer, Hadley. Good to see every one of you here. Okay, so I think you guys can hear me loud and clear, right? So wherever you are, just give me a like, share, or comment. Okay, I really appreciate that. Also tell Facebook and also YouTube that you want to see more of MarketWise Asia content in the future. Because if you don't engage with us, Facebook will think that you don't like us. YouTube will think that you don't like us. Okay, and you will not see our feed, okay, on your Facebook social media anymore. So give us a like, share, a comment. Okay, so okay, so as usual, you can see on the screen on your right hand side, okay, this Facebook Live, okay, this streaming is proudly supported by NASDAQ. Okay, so Incher from the NASDAQ APAC head of product and support, also from the investment intelligence team, okay, from NASDAQ, will share with you more on the US market structure part 2. So last week he shared about the US market structure part 1. So today he shall continue with that. All right. So this is a pre-recorded video. So Incher will share on this US market structure for about 5 minutes. Okay. So I will just play the video. You guys just enjoy and learn about the US market structure from NASDAQ. And I will see you guys really soon in just 5 minutes time. So let me play the video and I will see you guys very soon. Okay.
Welcome back.
Enjoy.
This is Incher Bo, Head of APAC Products and Support in the Investment Intelligence Division. In the first part of the US market structure series, I shared that 60% of all the US trading volume are being matched in the 17 trading exchanges. So what happened to the remaining 40% of the trading volume then? Exchanges are not the only place a trade can be matched. Brokers are also able to match trades off exchange using an ATS, example, dark pools, or internalizing executions. However, all exchange transactions must be reported for the benefit of all market participants. Reporting for the approximately 40% of trades being executed off exchange is facilitated via the Trade Reporting Facilities, or TRF, of which there are 3 in the US. NASDAQ operates 2 of the 3 TRFs, namely the FINRA NASDAQ TRF Cataract and the FINRA NASDAQ Chicago. Via these venues, NASDAQ is responsible for reporting the overwhelming majority of all transactions occurring off exchange. The pie chart on the right illustrates a distinct breakdown of the on-exchange and off-exchanges market share. This is unlike the typical breakdown we will see in the APAC exchanges. Having gone through the basics of the US market structure, including the trading and listing venues, how trades can be executed on or off exchanges, and why it is important to understand these differences, I would like to spend the next couple of minutes highlighting NASDAQ's market share. NASDAQ disseminates the most trading activities across all venues on a daily basis. Using this year's September trading volume, for NASDAQ-listed stocks, NASDAQ disseminated more than 63% of the traded volume, while for NYSE-listed stocks, it disseminated more than 44% of the traded volume, the most among all exchanges. This means among the 17 exchanges in the US market, NASDAQ disseminated the most liquidity for both NASDAQ and NYSE-listed stocks, for both on and off exchange trades. To help everyone understand the US trading volume market share further, let me use a stock listed on NYSE as an example. The stock is NIO, an electric car manufacturing company based in China. It also happens that this stock is one of the highest traded stock in NYSE over the last couple of months. The chart above is a breakdown of how NASDAQ market share between September to October this year was over 45%. This is due to NASDAQ leading position in the proprietary TRF data space, which alone accounts for nearly 35% of the total volume for NIO in the same period. This example shows that whether a stock is listed on NASDAQ or NYSE is not necessarily a determining factor for investor. The mandate, however, to report off-exchange trades to a TRF is crucial to determine the quality of market data products in today's markets. The increase in retail order flow has caused an increase in trading off-exchange and therefore an increase to trades reported via the TRF. To end off, in both parts of the US market structure series, I have covered that the difference between listing and trading venues, what are on and off exchange trades, and lastly, NASDAQ exchanges having the majority of the US trading market share. Thank you. If you are looking for more content on the US market, feel free to visit this website.
All right, so you guys can hear me again, right? So thank you, Incher from NASDAQ, to share with you on the US market structure data over here. And just a recap over here, right? Incher, it is the APAC head of product and support from the investment intelligence team from NASDAQ. Once again, thank you, NASDAQ, for supporting this Facebook Live over here. Let me put back this NASDAQ logo over here, right? I must support NASDAQ. All right, so once again, okay, let me share my screen right now. Okay, this is a World Cup screen. Okay, right now, in case you don't know, South Korea is 1, Portugal is 1, Ghana is 0, Uruguay is 2. Okay, all right, so no more World Cup for now. Okay, let's put aside World Cup now. Okay, so let's go back to my day's topic for today. All right, so again, a disclaimer, folks. Whatever I share today is just for education and informational purpose. It is not a recommendation to tell you what to buy or what to sell. Alex could be wrong, so please do your own due diligence. Okay, my opinion doesn't mean that I'm right. Okay, so please do your own due diligence. Okay, so before I kickstart today's session, just a few more announcements and some of the social media sharing over here. Right, the Market Insights Virtual Summit. Yes, it is coming again. It's just like October. We just had one again. Right now, we are into December and heading into January. So Market Insights Virtual Summit, it is coming on the 14th and 15th of January 2023. So it is your time, okay, to pre-register now. All right, I'll post the link in the comments. Hey, Jay is here, okay? I will copy you faithfully. Hello, Faith. Hello, Henry. Hello, Alex, okay? I'll post the link in the comments over here. This is what you should be seeing on the landing page over here. So very simple, okay. I think previously, okay, we mentioned Linda Reschke is coming, okay. I think unforeseen circumstances, she might not be able to come to speak, but nonetheless, we have invited Ray Barros, okay, to share a view on the in January. So he's the keynote speaker. So do register for this event, pre-register for this event. You just fill your name, email address, and mobile. You are good to go. Mobile, it is just for us to send a SMS reminder for those who are residing in Singapore. Okay, no spamming. All right. So Ray Barros is a professional trader, fund manager, author, and educator. Okay. All right. So he's also the author of the Nature of Trends, published by Wiley Press. So very simple, just head over and you will receive exclusive bonus and materials, okay, earlier than the rest of the people if you pre-register now. So very simple, just head over to the link. So let me post the link in the comments once again. All right, so back to the disclaimer. Okay, yeah, Telegram sharing and YouTube channels also over here. All right, so once again, I mentioned that sometimes I do share very sensitive, materials that is time sensitive, okay. I don't really usually post on Facebook or email. So please subscribe to our Telegram channel, okay, and also our YouTube channel. So our YouTube channel is approaching 2,000 subscribers already. So once again, I need your support, okay. Just subscribe to our various Telegram channel sharing over here. So this is our Telegram channel. So for example, prior to that, okay, I mentioned that that the Dow might hit 34,700, right? It is pretty accurate, right? Not too bad, right? So I'll share my information over here. So all these are very time sensitive. So do subscribe to our Telegram channel and YouTube channel as well. And also, I recently just trying to kickstart my Twitter account once again. So Twitter is my personal account. All right. So let me share the link in the comment also. So once again, this is my twitter.com/Alex_yo over here. So I think I'll post sometimes more of the so-called trade ideas, some interesting stocks that I mentioned. I don't usually share on the Telegram channel and also on email, of course. No, okay. So just my personal sharing. So for example, over here I shared this over here. All right. So I mentioned that I think this would be better. So yeah, on this GNTX, okay. All right, so it's a tight flag, good relative strength over the last 1 to 3 months, okay. So above Ichimoku cloud, above central pivot range. There's no hindsight. So I posted this, I think, on the 29th of December. So any interesting stocks I see, I will most likely post here. Of course, don't expect me this to be 100% trade ideas. So whatever interesting things like this, I will try to post here. All right, you can just follow me over here. Just follow me. All right, and just head back to this GNTX. Okay, let's take a look now. GNTX, and in fact, I had a position, but I really exited. GNTX over here. All right, Gentex. So they are auto mobile company. So yes, price do eventually has a breakout over here. But I exited, okay, because I'm not so sure about the market in the next coming week, okay. So my risk to reward, okay, it is about 0.5x. So yeah, okay, I don't know how the market perform. All right, so I exited with a small little profit, okay. Anyway, yeah, so do follow on my Telegram channel. So take a look whether there's some increment or not. Don't have, okay. If you are using Twitter, okay, so do follow, okay. All right. So again, these are insider calls to technical trading over here. I think after I posted, I sent this out to the EDM, the email subscribers. I think right now we have more than 1,000 plus of you guys subscribe to our these are insider calls to technical trading. So in case you haven't know about this, okay, this is the course that I have. So this is free for now. Right? These are insider course to technical trading. All right, so 11 modules over here. All right, so I won't go through all of them. So some interesting ones is like the 4 different stages of a market cycle, trend analysis, how to spot the trend in just 3 seconds. Okay, the number 1 candlestick pattern that you should stay away from, how to follow the smart money and spot trending markets. Okay, how to uncover trend, condition, breadth, and sentiment. So just click on any of the button over here and enroll, and you are good to go over here. All right, so I think there are some people who say they can't, you know, enroll whatever it is, okay? I think it's because of the browser that you are using. So please try to use a Chrome browser or switch to another device and test it out. You should be able to do so. So far, you know, of the thousands of you guys who registered for this course, right? I don't see much of a pro, only a few lah. So I think most of you guys should be all right? Okay, all right. So yeah, so right now, yeah, into proper. Okay, so how I view the market outlook, you know, and what I think of the market in the coming week, and what's the most biggest vulnerability in the market right now. Okay, so before I go into that, okay, just now the market actually has some announcement over here. So all right, Joe is asking any expiry date to the access to this video. No, so far no expiry date. So all right, so it is yeah, forever until now lah. Okay, forever until whenever I'm not around. Okay, yeah. So there's no expiry date for now. So okay, just now there's market data. All right, the U.S. Non-farm payroll. Okay, it is 263K, 263K. All right, expected is 200K. In fact, it's way better. Okay, it's way better, but the market took this negatively. All right, and then you know price came down. So right now, any kind of good news in the employment market is like bad news to the stock market, because okay, the Fed, okay, the market wants more people to be jobless, so that in order to tame the inflation down even further. Okay, anyway, so I'll go through the market later. So this is what I meant by need to subscribe to our Telegram channel. So of the latest news and such, right? I'll post to them in the Telegram channel. So let me post the link once again. Okay. All right. So let's get proper over here. And of course, the most talk about this thing is the US recession thing now. Okay. All right. So before I go into that, right? So just let me do a poll over here. All right. How many of you think that the US will be heading into a recession going into 2023 next year? So if you think it is US going to go through a recession, confirm 100% recession, okay, just type yes in the comment. If you think that US is not going to go through a recession, just type no in the comments. So I can see a kind of a consensus from you guys. So do engage with me, take part. Just type yes or no. It's very simple. Just type yes or no. All right. So let me take a look at comments. Okay, the first few comments is say yes. Okay, yes, 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 yes. Hey, Hunting, you are here. Hey, good to see you. Long time never see you already. Okay. Anyway, Chang Pei Wen, yes, yes, no. All right. So most of you guys say yes, right? Don't know. Christopher Sim, yes. CJ say yes. Okay. I think from the poll over here, most of you, I think about 80 to 85% say yes. All right. In case you don't know, all right, in case you don't know, the US recession ticker on TradingView, all right, is USRECN. All right. I'm not sure how many of you know that. Okay, USRECN. These are NABE based recession indicator. No, it's not NABE. Okay, neighbor is a National Bureau Economic of, is it what's the research or what? I forget also already. Yeah, economic research, National Bureau of Economic Research. Okay, all right, the NABE research. Okay, so it is USRECN. Okay, so this US NABE research over here. Okay, all right, let me just put, okay, I shouldn't put that. Okay, I should put the SPY here first. Okay, S&P 500 naked chart. All right, then I click on the compare at symbol. Okay, USRECN. Okay, then I put on a new price scale over here. Okay, so once you zoom that, okay, you can see that, all right, the 2020, the COVID crash that time, okay, the recession actually started here. Okay, recession started here. All right, it is on the January, near February, okay, February here, February of 2020 until about April there. So you can see that COVID 2020 recession date. Okay. All right. February, can you see over here? Right. February 2020, right? February 2020. So it is over here, February 2020. So if you zoom in to the, for example, like 2008 recession over here. All right. So it is in somewhere December 2007 until about June 2019. So this period over here. So you know, if you zoom out on a weekly time frame, you can see all the recession, right? They can see all the recession. Okay, 1998, 2002, okay, 2018, okay, all right, and then of course the very short 2020 is the COVID crash. So it is something new to you. It is something new to you, all right? You do know there's this ticker or this feature on TradingView, all right? Just type RECM in the comments. RECM. So you know, all right. So anyway, I think I mentioned that before in my previous Facebook Live. I'm not going to share that again. All right. Most of the time, okay, before the recession it is announced, okay, the market will start to go down already, okay. And then before the recession officially ended, okay, the market will recover. Okay, the market recover before the NABE, okay, announced that the recession has officially ended. So you can go back to weekly time frame like the 2008 over here. Okay, all right. Can you see that before the recession ended over here? Okay, the market has already recovered before the recession ended. Okay, so I think just I go through with you the site again. This is under the current market valuation over here. I'll post a link in the comments. So it is how market performs during recession, which I mentioned, I think a few Facebook Live ago. I think it is over here. All right, can you see over here? So these are the time where the recession ended over here, right? Recession ended. So before the recession ended, okay, market will go up. Okay, so this one you know already. This one, I think I mentioned that before. Okay, what I'm going to share with you today, I think this is the percentage of yield curve that is inverted. Okay, percentage of yield curve that's inverted. So let me share the graph, the chart over here. Percentage of yield curve that is inverted. Okay, you guys can see over here, right? So right now, the shaded area means this is the recession, or the shaded area. Okay, so right now we have about 80% of the yield curve has already inverted. So normally, okay, above 50%, there's a very high chance, okay, that the market will go into a recession. Okay, above 50%. Okay, high chance the market will go to recession. Recession over here. So what do you mean by the percentage of yield curve that is inverted? So actually it is pretty simple. Okay, it is all right. So you can see over chart over here. So there are many different yield curve that people are watching over here. All right. So you know, of course, the most common one that people are watching is the 10-year, okay, versus the 2-year yield curve. Some are watching the 10-year, okay, minus the 3-month yield curve, okay, 3-month yield curve over here. So there are many other things, okay, for example, like this, okay, 5 months minus 3 months, 10-year minus 1 year, 1 year versus 3 months, 5 year versus 2 months, 10 year versus 2 year, okay, 2 years versus 3 months, 5 years, a lot of different this permutation. You understand what I'm trying? Or 3 years versus 3 months, 10 years minus 3 months, that kind of thing. So these are the various permutation, okay, various permutations. So right now, about 80% of all these yield curve are already inverted already. So once there's this inversion, okay, there's a very high probability, okay, there could be a US recession coming soon. Okay, how soon it is, I don't know. Okay, the lag time could be a few months, could be as many as like 1 year, that kind of thing. So we don't know. Now the issue is, okay, how do you going to trade this market? All right, so you need to understand that, okay, the stock market, it is not the economy. All right, so having said that, okay, from now until recession, and of course, recession, you can see from the chart, okay, normally it really do come down, it do come down. So right now, the market maybe can go up a little while, maybe during recession when officially announced or whatever it is so, okay, there could be a knee-jerk reaction, market can do come down a little bit, okay, I don't know, okay, but from now until the recession, there's no news yet. The neighbor, okay, the NABE haven't announced yet, okay, and by the time they announce, in fact, I mentioned that I really want them to announce that. By the time they announce, I know that, you know, the correction might be going to end soon, okay? Or in fact, the market could have already priced in already. I don't know, okay? Right now, I don't know. So nobody knows, everything could have already priced in. So right now, there is still no recession. There's still no recession yet, okay? So let me post a chart for you to share with you again. So this is, I think I just got it from Twitter. So it is not too, I think just, I think 1 or 2 hours ago. So this is the, not this one. It is over here. All right. Anyway, this year, okay, 4.2 million jobs created this year, okay, the second most ever created. So the job market is still pretty strong. If job market is still pretty strong, everybody has job, everybody has money to spend, then a recession, I also don't know, okay. Now nobody knows, can not that easy to go into recession, okay. Consumer spending is still strong, okay. Anyway, all right, I'll post this thing over here. All right, so this is okay, so this many job created, right, don't normally create recession. Okay, so can you see that, you know, all the way 1941, 42, 46, all the way, how many jobs created, so many jobs created, okay. On the year itself, there's no recession. On the year itself, there's no recession. Recession the following year, okay, all right, some yes, some no, some yes, but most of the time it is no. It's only 1 year after so many jobs created, only in 1972, the following year, 1973, there's a recession. So after that, most of the time it is all no. Can you see from this data, it's all no, all right? So if you create more than 3 million jobs, I think more than 95% of the time, okay, the following year, all right, there isn't a recession. Okay, you got me so far. Okay, got me so far. All right, and then what I want to share with you, it is okay. And it is over this. Okay, and you can see over here, right? Of all the bear market, not all bear market come with a recession. Like for example, this year the bear market doesn't come with a recession yet. Doesn't come with a recession yet. So the data, okay, not so important. All right, not so important. Okay, so just to tell you that, some yes, some no, some yes, some no recession. Okay, just follow me. Some yes, so all these are the bear market. So the length of the bear market over here, right, in months, the decline is over here. It takes how many months to recover recession? So just follow over here, right? Follow over here. The average for all the bear markets, right, it is about 1 year, 12 months. Okay, average decline is minus 30%. Okay, length of recovery about 19 months. And this is something interesting over here. All right, in a bear market where there is no recession, I'm trying to zoom in. You guys can see, right? All right, bear market, there's no recession. Typically, okay, the length of the bear, it is only 7 months. All right, decline 24%, length of recovery about 10 months. Right now, we are already there. We are into the 11th month. Okay, all right, we have the NASDAQ, I think it's down more than 30%. So this is typically the average of the bear market when there is no recession. So everything I said so far, you can understand what I'm trying to say, all right? So if you understand what I'm trying to say of all of this data, just type yes in the comments. All right. Darius, I can't get RECN on TradingView. It is a premium paid indicator. I am not too sure. I don't think so. Anybody with a non-premium TradingView account, try that on your TradingView. Can you guys find RECN? All right, just let us know. Okay. So just a recap over here, I average about 24% decline. We are about there already. In fact, we are there already. Land of recovery, we are into the 11th month already. Okay, all right. Sorry, USRECM. Pei Wen, thank you so much. Yeah. Sorry. USRECM. I think I forget that. Sorry, USRECM. USRECM. Okay, USRECM. Okay. Thank you so much, Pei Wen. Okay. So back to this. Okay, we have no recession. All right. If there are so many jobs created, normally the following year, there's no recession also. Okay, job market is still strong. All right, so this time around, this year, but okay, the only thing that is kind of forward looking is of course the yield curve inversion. Yield curve inversion, about 80% has already inverted. All the permutation of the 10-year, 2-year, 10-year, 1 year, 3 month, that kind, 80% inverted already. Okay, what I'm trying to say now is that from now until the neighbor or NABE announce the recession, we still have some time. Okay, we still have some time. If you are a swing trader or a position trader, okay, that shouldn't stop you from trading the market. Okay, so you don't know. So we have to follow what the market it is telling right now. It could be until next year, I don't know, January, okay, the neighbor announced a recession of March or June or I don't know when. All right, so there's still some lag time. And take this data from the, all right, where is it? Okay, the US probability, the recession, the New York Fed, okay, .org over here. Okay, just a very quick one. I just show you guys. I put the link in comments. So this is, they think that 10-year minus 3 month is the most accurate one. All right. And then the probability of the US recession predicted by the treasury spread, okay, which, okay, they think that, okay, this is into the third quarter. I think, yeah, September, right? Probability, September, there's a high 23% chance. Normally you can see that it spiked to about 23%, 20+%. Then there's a probability that there's going to be recession. But you need to see that, need to see that normally it is from a very low level, then suddenly spike, from a low level, then suddenly spike, from a low level, then suddenly spike, low level, then suddenly spike, then subsequently there's a recession, right? So here not so much, but here also low level, then suddenly spike. Okay, so but that is into 12 months ahead. There's a September 2023. So which means that the recession might not come, okay, until September next year. All right. So when neighbor announced, it is always lagging. So I repeat, I repeat. So that shouldn't stop you from trading the market. Of course, if you are a long-term investor, I don't know, hold for many years, maybe, you might be afraid to invest, okay, but I'm just doing what I do best, trading, swing trade, position trade. I think there's still opportunity into market. Just follow what the market is trying to do now. All right. In fact, I don't want the Fed to pivot. Normally, I forget the data already. Normally, when the Fed pivoted, that is the time when the market will start to drop. So in fact, I don't want the Fed to pivot. Okay, I want the Fed to continue to increase interest rate. Okay, albeit a slower pace. Okay, maybe 0.25, that kind of slowly increase up. I don't want the Fed pivot. I don't have the data right now, so I think I kept it somewhere. But normally when the Fed pivoted, okay, when the Fed start to pivot, that's the time the market will come down, market will start to crash. Okay, so I don't want the Fed to pivot. I want it to continue to go higher. Right? So if this is something interesting to you, you think this is interesting and new to you also, just give me a like, share, or comments. I will really appreciate that. Right now, there's only about 46 likes only. All right. You want to give me angry face, I'm also fine with it. Just give me a like, share, or comments. Okay. I really appreciate that. So go back to the market. Okay, I think this is where most of you guys are most interested in. Okay, so okay, market update. Okay, key levels. All right. So how many of you actually remember what I said last Friday on the Dow? Okay, last Friday on the Dow. Can remember or not? Anybody remember what I said? All right, I move this. Let me try to remove this first. Okay, there's some lag. Okay, nobody can remember anything what I said. Okay, last Friday I said that I think the market can still continue to go up a little bit higher. Correct or not? On the Dow, and I share with you. Yes, correct, Mark. Dow, the resistance at 34,700. So last Friday I mentioned that. Okay, of course, you know, I also posted that in the Telegram channel over here. All right, so I mentioned that the market doesn't go up or down in a straight line unless you get too bullish. Okay, the Dow futures is hitting near resistance on 34,700. All right, which I mentioned in my Facebook Live last Friday. It is based on the high volume area, based on volume profile. I say the price might stall, have a pullback, or even a sharp sell off. Nobody knows. So just be aware of the potential resistance. So yesterday, okay, the Dow Jones, okay, futures. This is based on the Dow Jones futures. This is based on the YM Dow Jones futures. Okay, the cash and the futures price a little bit different. Okay, so Jun, okay, hit 34,700. Okay, and there is a correction. It came down a little bit. So right now the market it is down 0.5%. The S&P futures is down 0.88 and the NASDAQ futures is down 1.41%. So the NASDAQ it is still the weakest among the three indices. So in case you're wondering, all right, your indicator can show that yes, it's just how I see it. As I mentioned in my course, okay, I don't use that kind of support resistance signs where everybody is watching. I don't use that. All right, so I use a volume profile plus some other things that yeah, not just the standard support resistance. So I do the fixed volume profile. All right, so I just do again over here. Okay, somewhere around there lah. Okay, somewhere around here. Okay. Okay, somewhere around here. Can you see over here? This is where the highest volume transacted, somewhere around there. All right, and then price got rejected and coming down. So this is the highest volume at about there. 34,700. Okay, 34,700. Okay, all right. So of course, Dow was the strongest price hit there. Come down. The rest of the indices like S&P, okay, and also the NASDAQ will also come down as well. So as of now, what I'm looking at, okay, of course, I don't know whether it is going to be just a shallow pullback and go back up, or it's going to be a steeper pullback or head back up, or even it could just crash down. Nobody knows, huh? All right, but understand that this month, December, it is a new trading month. So the central pivot range will be a new CPR. The central pivot range will be a new central pivot range over here. All right, so can see over here, right? So this month, okay, the central pivot range is this green dotted line over here. I think first month, maybe you might not be able to see so clearly, okay? These are the green dotted line over here. So the central pivot range is here, okay? So the prior month, okay, it was here. Can you see? Okay, it was here, got supported, and then rebounded up over here. All right, just in case you don't know, all right, last month, okay, let's go back to S&P 500. Last month, oh, how come it doesn't show the, okay, sorry. Last month, November, okay, is the first month, okay, price is above the central pivot range, okay, 1 month. If this month price can stay above the central pivot range, then it will be 2 consecutive months that the market it is above the central pivot range over here. So there's a potential chance that after 2 consecutive months above the CPR, we could be heading for a bull market, okay, uptrend. Okay, I mentioned that previously before. Just a very quick recap over here. All right, the 2020 zero sell-off over here. 2 consecutive months above central pivot range. bull market, new trend, new up, okay, new uptrend. 2018, 2019, 2 consecutive months above central pivot range, price goes higher. All right, and over here in 2018, 2 consecutive months above central pivot range, price goes higher. All right, so just a recap over here right now. November, it is price is above the central pivot range. Okay, let's see whether we can hold on to it, and December we can stay above the central pivot range, which means that then January, okay, for those who are into position trading, holding for maybe a few months to a year, then maybe you can add more position. Okay, again, this is just my opinion, doesn't mean that I'm right. Okay, there could be sell off, I don't know, the sell off will come. Okay, but as of now, I think the market is still holding on pretty well. All right, but there's still some risk off potential. I'll share with you later. Okay, so of course right now the market, it is doing a pullback. Okay, of course the key level will be for the S&P will be the central pivot range, the pivot point, pivot point will be somewhere around 3965. Okay, 3960. Okay, futures 3960 for the S&P 500. This is the pivot point if price really do come down. So I hope there is some pullback. Okay, there's some pullback because right now the market breadth is at a high already. Okay, I really want the market to have some pullback, a correction, so that the market can go up in a more sustainable way. All right, for the NASDAQ, it is also the same. All right, this is the pivot point. It is somewhere around here. All right, it is at about 11,600 for the NASDAQ futures. 11,600. All right, and for the Dow, the strongest among the three. Okay, so it is at about 33,660. Right, 33,660. 33,660. If price really do come down over here. Okay, and I also want to let you know that it also coincides with high volume area based on volume profile over here. Not this one. Okay, okay. So can you see? I just want to see the recent, swing high over here. This swing over here. Okay, so I add in the volume profile. This swing high to this over here. Okay, all right. So it is. All right. Can you see this high volume area, high volume node, point of control, also near the CPR, Okay. All right. So for the NASDAQ, okay, this swing low to swing high over here. How come it is not showing? Let me try this again. Fixed range, flash from high to the, okay, not from, where is it? Yeah, okay. So somewhere near the central pivot range, also somewhere near there, okay. All right, and then from the Dow, yeah, this range here. Okay, yeah, correct. Okay, somewhere around there. You can see the high volume node over here, also somewhere around there. So the central pivot range plus the high volume node side, I'm watching that level here, which I mentioned already, which is somewhere around the central pivot range, the pivot point. Okay, if everything is okay, understand what I'm trying to say, all right, just type okay in the comments. Just type okay in the comments. So go back to the S&P 500. All right, so it is about 3960. I mentioned 3960. All right, 3960. Let me post in the comments. 3960 is something that I'm watching. If price really can come down, this will be a very strong support. Okay, anyway, I also want to do a consensus over here. So from now until end of the year, all right, do you think the market is going to go up higher, or do you think that no, this is a sucker strategy, it's going to come down, it's going to crash? Okay, If you think the market is going to go up until the end of the year, December of the year, just type up. All right. If it is, you think the market is going to go down, just type down in the comments. Just type down in the comments. I want to have a consensus. Because right now, a lot of people also expecting a center rally, which I'm also a bit scared, okay? Because like many people expecting a center rally, then maybe the reverse might happen. Anyway, but again, there are people in the bear camp also. Okay, not all are bull. Okay, I know on the Twitter, there are still people who are bear. So we are still not at that level where everybody it is bullish. We are still somewhere indecisive. Okay, we are still somewhere indecisive. All right. J-Tune say trend lines say down. J-Tune say down means down. Okay, he is a stock god. All right. Yeah. Jai say Fed pivoting. Yes, actually, yeah, this League Lab report, one of them that I follow. So it is the same data. Yes, correct. So what that diagram it is showing. Yes, you are right. Okay, Fed pivoting is not really good. All right. So 14 December, yes, it is until the CPI data is out and also the Fed is coming out to speak to decide the interest rate again. So until 14th of December, okay, you still have time to do some trade. Okay? At that point in time, 14 December, then that might not be a good time to trade. All right. So I think most of you say up, or is it because you guys are influenced by me already? Anyway, as of now, I think the market can still go higher until end of the year, but okay, there might be some correction. Okay, I repeat, there might be some correction. So the reason why I say the biggest vulnerability, how to pronounce, biggest vulnerability, okay, biggest vulnerability, okay, I think right now is into the VIX, okay, right now it's into the VIX. So VIX, okay, VIX. All right, so I do a naked chart over here, okay. All right, so VIX, of course, you know it is the fear index, okay. Basically, VIX is talking about the implied volatility of the S&P 500, right? So I think most of you should know VIX is inversely correlated with the index, the stock market. Okay, when VIX goes down, the stock market will go up. You know, when there is a crash, a correction, okay, where this is where when the VIX, okay, will spike. All this you know, right? All this you know, right? Okay, you should know, Okay, most of you guys shouldn't be, most of you guys should know, okay. But previously I did mention that I have this star signal where it can roughly tell me where it is at the bottom. Okay, so when a star signal, the blue is showing it, which means that the VIX is at a low level. It could spike, right? So far it's doing well. Of course, it is not 100%. Okay, there's times it is not right also. Like for example, recently in October, there is this star signal. Okay, based on the daily time frame. Okay, it didn't really work, and price the VIX continue to go down lower. So this doesn't really work. Okay, so it's not 100%. It's not 100% true now. Okay, but what I'm going to share with you right now, it is based on the 2-day time frame. Okay, the 2-day time frame. 2-day time frame one. The 2-day time frame signal that I have is on the red star over here. Okay, I think some of you might be confused. What is this 2-day time frame? Okay, and I think I need to repeat. Okay, most of you guys are very familiar with the daily time frame. 1 day, every day is one candle. Okay, and some of you know the weekly time frame, the 1 week time frame. Every 1 week, okay, a candle form. Every 1 week, the candle form. So this 2-day time frame is very simple. Every 2 days, then one candle form. Okay, can understand? If you understand what I'm trying to say, just type 2-day. Just type 2-day. 2D. This 2-day time frame. The 2-day time frame on VIX, okay, is potentially could be showing not yet, but very soon, almost there, very soon. Okay, very soon. Okay, it might not show, but I think it might show if the VIX continue to go down. Okay, and based on other proprietary, signal also adding together, all right, the red signal might be there also, okay? Could be there, okay? I won't tell you what is the parameters, okay? 2 days time frame plus some other parameters, okay? The red signal could be showing up soon. Okay? In fact, no, not in fact. In fact, for other parameters, the red signal is already showing already, okay? Just that 2-day time frame, not yet, and which means that there's a potential only, potential doesn't mean that I'm right, potential there's a spike. When there's a spike of the VIX, which means that the market will correct. But of course, this doesn't tell me the magnitude of the correction. It could be just a few days correction. It could be a crash. Nobody knows. Nobody knows. I tell you. Okay, don't quote me. All right. Judging from the previous 2-day time frame, it's not always June as well. Okay, in July, okay, it is a false signal. Okay, VIX doesn't spike until it came down on the daily time frame. Then the VIX spike over here, the blue signal. Okay, and there's time where the 2-day and the 1-day star signal coincide, and then okay, the VIX spike. All right, and the 2-day somewhere around there. Oh, sorry, 2 days quite soon on here. 1 day, okay, somewhere around there also. But I would say that this will be a correct kind of a signal like that. Price spike over here, and then after that, any more else? And then have to go back until in 2020 November when the 2-day time frame also spike. All right. So the okay, Derek is asking, right? Red is on 2-day time frame. Okay. Blue is on 1-day time frame. Okay. All right. I'm using different time frame to give me perspective. All right. And then on other parameters, okay, in fact, there's a red signal already. Okay. So we shall see how it goes. So this is the biggest vulnerability, okay? Because right now I think many people think that the market can continue to go higher. Okay, so maybe maybe trapping the people thinking that the market will recover and then they go long next week, which means that next week I'm more careful. That's the reason why I already exited all of my swing trading position on equities. I exited already. That's the reason. That's the reason why I exited on this GNTX, which I mentioned, right? GNTX, although it had a breakout, okay, but I decided to exit over here. Okay, all right. Can so far everything okay? All right, can so this is my proprietary star signal over here. So do watch out for that potentially. Doesn't mean that I'm right potentially. So I rather be safe. Okay, right now the market breadth is also on a high right now. So I go back to stock chart over here. I mentioned in the course also in my insider course to technical trading. This is the decision point chart gallery over here. So in case for those who just joined me, all right, I have this free course, the insider course to technical trading. Okay, insider course to technical trading. Okay, so this is where I share with you this decision point chart gallery over here. Okay, all right, to uncover the trend, condition, breadth, and sentiment in one glance. All right, so the market breadth is at a high, which I don't really like it. Okay, so just a very quick glance over here. Stocks above their 20-day, 50-day, and 200-day EMA. All right, so you can see that we are at a high level now. So prior to that, market breadth is at a high. Okay, there's a correction. Market breadth is at a high. Correction. Market breadth is at high. It's a correction. Okay, all right. Okay, so that's the reason why I don't like. So this is potential. Okay, all right. And then what else? VIX. And the VIX, I'm also watching for the signal now. VIX, I mentioned many times already. So far there's no signal, no star signal yet. So I'm still watching. So far it's moving in tandem with the market right now, which is good. Okay. All right. So next week, okay, moving forward, there's some divergence. Plus, okay, I mentioned the VIX, right? There could be a star signal, a potential low could be causing a spike. Then I'll be more careful already. So my view is that right now, if you are having some swing position trading, okay, you are in position already, to take some profit off the table, or at least trail your stop, shift your stop loss higher. Okay, for those who do not have any position, okay, then I think, okay, it is not a good time to go long, okay. Okay, market price is at a high. Okay, if you go long, now I think it's a pipe. Okay, of course I could be wrong. Okay, I could be wrong. The market can do like this and go up again. Okay, it could be wrong, so I rather miss the chance, but I will not go long right now. Okay, I rather miss it. As of what I'm speaking right now, the market is recovering. It is forming a long shadow on the S&P and also on the NASDAQ. Okay, so the night is still young, so we shall see how the market closes tonight on a Friday. Okay, all right. So leading sector, no change. Leading sector, no change. So as I mentioned in my previous Facebook Live, where is it? Seasonality. Okay, December generally it is a good month for the financial sector. So later I'll go through some of the trade ideas over there. So financial, I'm watching financial. In fact, what else? Where is it? Semicon is also not too bad. Okay, semicon is not too bad. Later I'll go through. All right. So before I go into leading some of the trade ideas, right? So I also want to talk to you on the dollar index. The dollar index, The mainstream media, it is always wrong one. Okay, all those mainstream media. So the mainstream media is always late. So what do I mean by that? Okay, so this is also what I found on Twitter as well. Okay, let me share this over here. And then over here. All right, so you guys can see the chart over the diagram, the picture, right? In October 2022, just this year, okay, the magazine cover start to show, wow, the powerful greenback, the US dollar is near a 20-year high, okay, and then this is in April. I think it's in April, okay. Can't stop, won't stop. The US dollar had the Fed turn US dollar into a wrecking ball. It is so obvious, they are so late, then they publish this kind of thing. The US dollar is king, can't stop, won't stop, okay. And then what else? The powerful greenback. October, remember October, October. So October, it is, okay, somewhere around here. October. October is somewhere around here. Then they post this kind of magazine cover. When the US dollar has been up for so long, since the start of the year, then they post the magazine cover. Dollar is strong. Okay, and then subsequently, what the US dollar do? Okay, the US dollar came down. Okay, and if you have been watching my Facebook Live for the past how many FB Live, I mentioned that the US dollar is weak, right? And I have been shorting the US dollar. Okay, so dollar yen I shorted, and I also shorted the dollar Swiss. Okay, so there's a lot of opportunity to short the dollar. Okay, so for example, last time I mentioned about dollar yen, the dollar Swiss I also shorted. Okay, you can see this is a wash and rinse. Okay, wash and rinse over here, come down few days, 2 days ago, wash and rinse I also shorted, and it came down and also exited. All right, so of course a weaker dollar will help the equities market as well. But of course, you don't expect like to go like that, okay. There'll be maybe rebound, some technical rebound all the way, then come back down again, rebound and come back down again, that kind of thing. Okay, all right. So yeah, so dollar if you add my usual indicator, okay, dollar index. All right, very clear cut one. All right, above the CPR uptrend, below the CPR, time to be cautious. break below the CPR, break below the cloud, downtrend. This is in a clear-cut downtrend right now. Okay, all right. So I'm not sure how many of you actually follow the trade. Okay, but but I think dollar right now it is in a very clear downtrend. Okay, all right. I caught somewhere near the high over there. All right, I've been shorting the dollar for some trades already. Okay. If everything clear so far, you understand what I'm trying to say. Okay? If you like what I'm sharing or what, okay, just give me a like, share, or comments. I really appreciate that. If you think it is clear to you, just type clear in the comments. So I really appreciate your engagement with me, entertain me a bit. So for those who just joined, right now we still have about 200 plus people in the room, both on YouTube and Facebook. The Market Insights Virtual Summit is coming up in January 14 and 15 January. So this will be the site you'll be seeing over here. Okay. All right. So Ray Barrows will be the keynote speaker. So do register for this event, and you pre-register now. You get to receive exclusive bonus materials and reports. Okay, way before the rest of the other people. Okay, so do register your interest right now. All right. So 14 and 15, I'll post the link in the comments. All right, give me a like, share, or comments. I would really appreciate that. Okay, any other questions before I call it a day? Okay, yeah, I forget the leading sector industry. All right, 1 hour already. So I just do a few ones over here. So leading industry, as I mentioned, right? As I mentioned, this finance industry, right? Finance sector. KRE is actually the is it the too many things. Let me try to remove some of things. Too many things already. Okay, so KRE, it is the regional banking ETF. Okay, KRE. All right. So from 14th of December till about 27th of December for the past 15 years. Okay, for the past 15 years, 93% it is positive. All right. Of course, don't go in now lah. I'm just asking you to keep it in your watch list. Okay, December typically it is a strong month. Okay, but wait for correction first or some trigger to enter. Another one it is IAI. IAS is the broker and dealer. IAI. All right. Same also 14th of December to about 6th of January. For the past 14 years, 93% of the time it is positive. All right. And then for semicon, as I mentioned, quite strong. Semicon SMH, right? Semicon 14th of December, all right, to 9th of January, 14 years. Okay. And 93% of the time it is positive. All right. And then, okay, in fact, gold, as I mentioned, right, the precious metals towards the end of November, December, okay, start of December, then starting to get a little bit stronger. So for gold, the gold miners GDX, all right, 20th of December, okay, to somewhere around the start of January, okay, for the past, I think about 10 years, okay, it is 100% positive. I think so, okay. All right. So you can take a look from here. All right, stockcharts.com. GDX, gold miners. All right. You go to these seasonalities. Okay, GDX. In fact, can you see for the past 5 years, 6 years, December 100% positive. Okay. 9 year 100% positive. 10 years 100% positive. 10 year 90% positive. So it's about there. Okay, it is pretty strong in December, and GDX has already started to run. Okay, started to run already. Okay, GDX. GDX gold miners. Can you see over here downtrend, breakout over here above the cloud, and right now it is still heading higher. All right, of course, whether you want to chase or not, up to you. Okay, all right. For me, I won't chase. I will still wait for a signal, a trigger to go in. All right. So normally I don't tell you when I enter. Okay, you wait for a trigger. Wash and rinse. So if you know wash and rinse, then you know roughly where I entered. Okay. All right, Ken. So because this is not a signal service, so I won't tell you where I enter. Okay. All right. So just roughly know what are the sectors, industry that is moving. Okay. And then for steel, it is also not too bad. It is quite strong. From 20th of December until about 2nd of January now. So about 13 years, 92% of the time it is positive. So which means that out of 13 years, 12 years, it is positive. So the finance, okay, semicon, pretty strong. GDX, the metals are GDX, SLX, okay. All right, so of course, if you talk about indices, typically in December, it is a strong month. So just one more thing before I call it a day. All right, so this is all right. So yeah, this is the seasonals. Okay, center rally December. Okay, most of the time it is positive, but okay, it is the strongest. It is on the 15th of 15th of December onwards. Okay, typically that is where the center rally will come. So right now, not the strongest yet. Not the strongest yet. Not the strongest yet. All right. Okay, so right now, I really wish that we have a correction right now. We have a correction right now. Okay, we have correction right now. All right. Okay. So Manfred, so ask me, what website do you use to track the industry trend? Manfred, have you gone into my site, the Insider Course to Technical Trading? This is the site. Okay. How to follow the smart money and spot trending market? Exactly what you want to know, right? Just go through this. How to follow the smart money and spot trending markets. All right. Okay. How to register? I mean, for the virtual summit, right? I already posted the link in the comments just now. So this is over here. So Lee, it is over here. I posted the link in the comments. Okay. All right. So Darius is saying for KRE have watched and risk hit CPR. Not yet. So there's no signal coming in previously. Okay. All right. So KRE right now it is a bit messy. So could enter, but I will not enter now. Okay. All right. So technically, not wrong to enter, but not now because of overall, as I mentioned, right? As I mentioned, the VIX, okay, I think there might be a spike next week onward. So I want to wait until next week and I see whether I want to enter some of the trades. Okay, I will wait for a while because when the whole market is down, most likely the rest of the industry will come down and the stock will come down. So I don't want to rush it. Okay. All right. So I will enter now. All right. And 50 December after FOMC. So yeah. So right now I'll see how it goes. Okay. All right. Copper is H. Copper. All right. Actually, the base metal is quite strong recently. Copper, it is HG. It is HG. HG in Hokkien stand for another word also. If you don't know what I mean or not. Okay. Hong, G. You don't know what is it. HG, copper futures. Okay, it's pretty strong. Pretty strong. All right. It's pretty strong. Okay, so yes. Copper metals generally wise, late December, as in December, it is pretty strong. Okay, so yeah. Again, I won't tell you when to enter lah. So it's up to you to decide when to enter. This is not a trade signal service. All right. So generally, metals are pretty strong in late of the year. Okay. Okay. There is asking, right? US seems a good point for oil if using weekly long, but oil ETF doesn't seem to follow the trend. Anyway, we can profit from oil is USO, right? Okay, oil fund. It is in tandem with the oil, in tandem with the with the futures oil, it is heading up. There's a rebound actually. All right, it is actually a rebound. Okay, rebound. Okay, it's also a rebound also here. All right, so if you want to trade the oil, if you don't want to trade ETF, another alternative that it is you trade the CFD oil forward contract. Okay, so the movement is very similar to the oil futures like IG. Okay, like CMC, they do have the oil forward contract, so you can use that as a proxy. Yeah, they move in tandem. Okay. All right. So any other question? 1 hour 30 minutes already. Okay. So what is the score now? What is the score now for the ball? Still South Korea 1, Portugal 1. Too bad. But Uruguay is 2. Okay. Any other questions? So I think if you find value in this session, okay, just type value in the comments. Just type value in the comments. Just type value in the comments. Okay. Tracy is asking, what other time you mentioned what trade signal you are using? What do you mean by trade signal? I don't understand what I'm trying to say there, Tracy. Can you rephrase your question? So I think the key thing that you want to take note is that, okay, the biggest vulnerability, okay, it is actually the VIX, okay, the VIX, all right, potentially only, okay, the VIX could spike, okay, next week. I could be wrong. So please take it with a pinch of salt. Okay, I could be wrong. So please don't copy me. All right. Please don't say Alex say the VIX will go up and the stock market come down. The market can very jolly well, can go like that, boom all the way. So I don't know, but I'll be more careful. And because the market breadth is at a high, so I won't be so rash into going into equity trade. Okay, I'm still trading the forex market. All right. So I think with that, I thank you for staying with me until the end of the session tonight. So do watch your soccer, have a good rest. Okay, do give me a like, share, or comments. I really appreciate that. Liking is free, doesn't cost you money. Okay. So with that, I wish you a good night and I will see you guys again next week. All right. Thank you. Bye-bye.